Report, where I share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to like, subscribe to these videos and share them. Thank you. Tonight's video, I'm going to talk about the Fed, what's likely to happen tomorrow, and as well, let's get into talking about the China negotiations that were just announced. Let's get into tonight's video. Well, welcome everyone. A lot going on. We get the reopen of the futures and we literally bounce by 1%. We're now up 0.79 on the S&P. I guess this is all about Scott Bessent going to meet with the Chinese on Saturday. And it's interesting, the rhetoric that's already being passed around. China's basically posturing ahead of the meeting. Scott Bessent's posturing ahead of the meeting. We'll see where it goes, but it doesn't take much. And I titled this video, Will the China deal be bullish? And there's a couple of things that I think we need to discuss about that. So let's say none of the tariff rhetoric ever started at all. And we looked at where the markets are today. I think they would be exactly where they are right now. So let's say a deal happens with China. Doesn't that put us somewhat back to where we were before all of this noise started? Does that really make a change in things for today, for the next 3 months, the next 6 months of the economy? I was thinking about this earlier as I was prepping for the show tonight, and I couldn't come up with a good answer. Maybe there'll be one to come up. Maybe you folks can share some of that, and if nothing else in the replay, you can set that up. But I don't see what is going to change, and I almost feel like the whole scenario, just watching Trump in general, he's a disruptor. So he's disrupted everything, changed all. No one knows what's going on anymore. Uncertainty's been used a lot, but maybe just confusion should have been a better word, and a way to shuffle everything around and then renegotiate everything. They're also talking about possible deals next week. So they're still playing the same jawboning game they've been playing with us all along. But I guess the stakes are a little higher now that they're getting face to face with the Chinese. And it's going to be interesting. I've been watching a lot of shows about the shipping, trying to figure out if there's anything real happening there. I don't think anything is really disrupted just yet. We did see some of the numbers that came out today, big surge and everybody front running all of the tariffs and all that. So they're trying to buy. There was a big surge of buying going on. But in the end, I don't think anything's changed. I'm sitting here, the S&P down, I think 6% and change. We saw the big spike. We certainly saw the volatility. But all of a sudden, when I talk a lot about this is the normalization. So you get the big spike down and then the market rebalances, and has a lot to do when I talk about the quantitative stuff with the volatility collapsing and normalizing the markets. That's what we're seeing on the big scheme of the markets. We've seen all of this news, all of the noise come in, and then now we're at a normalization. So we're back to asking different questions possibly. Let's just say good things come out of the Chinese negotiations, such as, there's a dialogue and it sounds positive. No deal's going to happen right away, right? But what we could get is this normal kind of chatter around things, and all of a sudden we're back to normal again. So where's the markets really going to go? Where's the economy? I'm trying to center back. This was a big bunch of noise that got us off the main track of what we need to be talking about. And so I've been continuing both in my Substack as well as on the YouTube channel here, to continue to discuss that I think we're going to see a slowdown in Q3 and 4. Somebody last night was going, there's no recession. Of course, there's not a recession right now. But I still see that weakening coming. There's a lot to do with some of the metrics that I've been looking at, and it looks like a lot of stuff is going to come into fruition probably in the third and fourth quarter and may carry into 26. How far? At least Q1. There's absolutely, just trying to put a best scenario together, there's nothing out there that's going to, I don't see a big bull market restarting and we're going to the moon and all that stuff. I just don't see it. I think after a huge move like we had in 23 and 24, I think compounded returns on the S&P was 52.5%. After having something like that, we need to consolidate to normalize that big spike over 2 years, and then possibly, depending on what happens, there's a whole lot of noise to come yet. They do not have a tax deal. There's a bunch of stuff to come out of Congress. So don't think we're out of the woods here, because we're not, okay? There's a lot of other noise that's coming into play. The tax cuts are just maintaining and making permanent the 2017 cuts is really critical. If they don't do that, then you're going to see the largest tax increase in the history of the United States. I suspect they'll do that, but how they do that, what kind of noise gets created around there, just like some of the fear tactics that we usually see with Congress and everything that goes on. Anytime there's a debt ceiling in the past, we're going to shut down the government. They've got to really get into the front light of what everybody's thinking about and looking at. So I just don't see. I'm just going with everything that I look at from our database being underwater on the intermediate. Everything points to there's a lot of work and recovery to do here, and so I'm going to stick with that. So let's go over and talk about the Fed for a couple minutes. And I went through a yield curve analysis last night. I don't think I'll do that tonight. I might. We'll see what happens. But the Fed has nothing to do here. And I made a comment both in last night's video as well as in the Substack, as we're probably at the premium structure from the Fed being independent and from the government, because Powell's not going to listen to anything that Trump says. So he's going to stick, I think they're going to stick to the line that, they don't have any idea what the tariffs are going to do, all of the uncertainty. We're going to hear the same words that we heard from Powell this time as we did last time. And it's pretty typical, let's face it, when they put out the statement each time when they do their press release, everybody's looking, they changed this word and that word. They changed 6 words, and somehow there's some meaning in those 6 words. And that's how desperate I think the financial community is, trying to find something that might be, revealing what they're going to do next. I mean, that's the big deal. And as I still think they're going to lower rates. I mentioned this in last night's Substack at least 2 times this year yet. I don't think it'll be until maybe September, October meetings when we get there. But they are going to adjust the front end of the yield curve, and I think that will happen. And everything on the back end, let's go from 7 years out, is going to be market driven. There's not going to be the influence that Fed's going to have on that front end, maybe up to the 5-year. And then after that, we get in the back end of the curve, then that will be market driven, means supply and demand and what kind of, activities going on in the economy. So if we do get a slowdown, then maybe we see that back end start to drop down a little bit, but I don't think it's going to. I've been stuck on this for maybe a year and a half now, that when I showed you last night, we had 5 1/4 front end, and we had around a 4 something back end, and all we did was adjust everything down to 4, and it's a flat line. And I talked about that. That was my original goal. Now I think 3.25%, 3% on the front end, and still staying 390, 440 on the back end on the 10s out to the 30-year maturity. So what that means from my viewpoint on the economy is that would be structured so the economy can function well, the financial system has a little bit of a spread to play with there, and then that creates a pretty healthy environment. And if we do get there, then we'll see what the setup looks like. But I'll probably be finally talking about the small caps, maybe the Russell 2000 will be able to move, and we'll start to get some action there from the standpoint of, seeing some appreciation in that index. But as an index in itself, there's still a lot of good small cap companies, a lot of good mid cap, but none of those mid and small cap markets are going to move very well with the yield curve and the financial system structured as it is right now. And this is really important. You have to remember, when I came into the markets, the interest rates were about 18, but they went to 25. I started in 1979, and they just kept going up until around 81, 82. We started seeing a rollover at that point in time. Volcker was the Fed, and it was very aggressive time. It was really crazy time to be a bond trader. I can tell you that. Much crazier than what we've seen at any time but in those 45 years. But the point is that we're going to see the Fed continue just to kind of structure this. If you back up and look in the rearview mirror, what did Bob Kendall say going back when we started raising rates? I said this was a goal to normalize the interest rate environment. And from that, I mean, get it back structured, borrow short, lend long, and there's a spread there. That's just how things should work, and they work best with that kind of structure. And I said the Fed that's where they wanted to get to. They want to get out of the QT, QE business. They don't want to micromanage everything like they've been doing since Bernanke days and the GFC. All of this stuff, it's a new era that we're trying to move into. And if we can get the structure from the Fed to get that yield curve, like I said, and we see what type of economic activity we have, then we could be in a really good place. And let's face it, now, I don't know what kind of these deals that Trump has talked about that's real, but he was rattling off $8 trillion of new investments. If you think about that, that's a really big number. And I said this before, even if things start to soften out as you come into 26, 27, if these deals are real and these capital expenditures are coming in, that's just going to support everything that happens. So the recession or the negative quarters that I'm talking about right now are a transition from where we are now to get to that other side. This is how I see it right now. It could change drastically in 6 months. We get more information. But trying to look and read the crystal ball looking forward, that's what I'm seeing from the standpoint of what the markets are going to be looking for and what they need to move forward. And if you have $8 trillion within capital investments in your pocket, that's a big, big number, folks. The U.S. wins, but the world wins because all that money's going to flow over the world because he's a lot of foreign investors coming in, and he's just bringing all kinds of corporations, and everybody's pledging money. We'll see if it's real or not. If it is, or anywhere, divide by 2, and that would be fine. I always think of this. I'm trying to think of how to tell the story. I guess possibly at least 2 of these people are dead. But when I first started in the business, there was a guy that named Dick. We'll just go first names. And he used to always brag about his positions, and we'd find out when we found out his position was divide by 10. And so everything Dick said was divide by 10. And there's another guy named Jack, and Jack was divide by 2. They were big deals, but they were only half as big as they said. And the last guy's name was Art, and Art was multiply by 0 everything that man said was bullshit. Okay, that's all there was to it. And so anytime I see these divide by even, so I can apply that theory to Trump. I don't think it's not an art, but it's probably divide by 10 or divide by 2. Even if you do that, you will have a monster amount of capital investments. And to move anything forward, if I have a company and I have a pledge by investors that are going to give me that investable capital into my business, I'm at least going to survive or do better, you would think, if the idea is good. We're talking about the United States of America. So that being said, I still am very bullish with AI going back. We get into 27, productivity gains, everything. I think the future is amazing for my from the old man's view that's seen a lot, and looking forward, I think there is quite the future ahead of us. So let's do this. I'll end that right there. A couple of things I'm going to start doing. I'm going to change a little bit about the channel. We have literally thousands of people that have bought our indicators. A lot of people using our portfolio management tools, my institutional customers. Everybody kind of joins in on this channel. So I'm going to do, I'll figure it out. It may not start till next week, but it could start really soon, like as soon as tomorrow. But I'm going to do about a 10-minute segment, maybe 15, where it's going to be educational. And there's going to be plenty. Even if you don't have our stuff, you're going to be able to learn from that. So whether it's a way to look at fundamentals or screen stocks, or to manage portfolios or use one of our indicators, I might just do a quick thing. The reason why I'm doing this, I had issues with my emails for I don't know, multiple months on and off, and I finally got it fixed. And I'm getting flooded because people haven't been responded to. So this is in direct response to that. And I think it'll be really good. So we're going to throw in macro analysis like I just did, and then we'll go through the database. We'll feature some thoughts, some type of educational element that can come in. And then at least you'll be able to find them, because here's what happens on this channel. I get into a rant and I'll be making a presentation on S&P, and I'll do an educational moment, and those will still happen, but I want to be able that you can find them. I'm working on getting the channel so there's chapters and breakpoints, so all that stuff. I'm reconfiguring quite a few things. So let's get into it tonight. We're going to go through the database. We'll go through the normal charts. Where are we at right now? I did about 15 minutes on that little rant, so we should be able to get through everything as normal. And I'm considering, if things play out, I may do a live during the Fed meeting tomorrow. Oh wait, it just starts. It's starting tomorrow. It's Thursday that the numbers come out, I think, right on the 7th. Yeah, that. I'm not sure when it comes out. I think whenever it comes out, I'll check it and just watch. Make sure you subscribe, hit the bell so you'll know when I come live. So let's get into. Let me double check everything. I'm sure the database should be updated. Let me just check a couple things here, and we'll move forward. Okay. Looks like we're good to go here. Very, very, very interesting. Okay, here we go. So this happened, we have to go back a couple of weeks ago. And I guess 3 weeks ago, the week that we had the big down Monday coming into the Wednesday big spike. Monday was a big down day, and we had a positive rotation on the database. And I was like shocked. I was like, wow, Can't believe the markets were down that hard and we got more buying than selling. That was the divergence that happened that started the run that we've been on. Just looking here now, I'm going to round off these numbers, but we have about 1,600 new buys. We've now bumped up to 54.29% bullish. So that's a big deal. And that happened on a down day, which is, once again, maybe a divergence of some sort. And, we keep getting, you'll see in a minute, the market grid keeps making these channel shifts pretty unusual, but I still think we're dealing with that 3-week, that volatility bubble that we had, and we're still trying to normalize these markets. But this is a really impressive number. And if I'm going to look down below, no new buys on a sector level, but that's pretty amazing there. So we now have 7,918 symbols long, and those could be mutual funds, ETFs, and stocks. Okay, so the database is pretty large. So that's impressive to say the least. So I'll have to digest that as we go through the S&P, because this is interesting. As I mentioned, we get one bit of news, and the S&P spiked up. It was up over 1%. I did run the data sheets, and I'll bring that up when we get into S&P. I'm looking at it on the other monitor here, so I did run that. Very interesting configuration that we're seeing. So let's just do that. Let's go ahead and take a look at the S&P. So we have this downward channel that's come up, and what's happening here is we're all the way up at RXT. So we're at the extreme already for the day. Let me just bring these numbers up. Yeah, so 56.96 is the high. I brought up a number last night. I want to reemphasize that. That's that pivot high that we have over here at 58.37. That is going to be, for me, the drop dead moment. If we take that out, then that's going to reconfigure a lot of things I've been saying. But there's a but, okay? And the but is, as we look at the algos on the momentum, it looks like it's going to roll over. So this may just be a snap, and it goes along with what I was just saying on the opening comments. Even if there was the perfect deal, as Trump would say, with China, what changed then? So maybe get a little better deal, but what are we looking at from an economic standpoint? Going back to my opening comments, is that if we're seeing this type of configuration from the standpoint of we're consolidating 2 years of gains, and this whole year has just been bouncing around really in a sideways range with a downward bias. We were down 21% on the S&P at one stage. So the bear market, anytime you hear the bear market, it's usually the time to buy, and that was the case this time. So we're seeing this consolidation. We're staying under the 200. So 58.37, the 200 is still going to be a number to watch. And the algos are suggesting we're going to still fade off here. So this may be a little head fake that we're seeing right now based on some news. There's not a lot of substance. And think about it. We got the Fed tomorrow. So this thing could just be right back, could be closing lower. This is what's being projected on those stats. Let me just bring up something here. I didn't get everything totally prepped, but this will just take a second. I'll bring up the sheet here. All right, so let's just bring this up. Okay, so this is the data sheet here. Let me just get it situated here. Okay, so 92% bullish, and that's one of the things about these sheets. When you folks get your hands on them, I reran them 5 hours before the New York Open last night. So if you look at what I showed you yesterday in YouTube, and then go to what the data sheets looked like when I did the Substack last night, typically that comes out around 5 a.m. New York time. So just a few hours ahead of the opening of the futures and reopening of the U.S. markets and the futures activity, high activity level. So we're just seeing there's a slightly different look. So these sheets that are on here, one of the things I'm trying to get fixed is a way to fetch new data on the fly, so you can push a button on these sheets and it just refreshes and pulls things in. I'm pretty close to having that done, and that's what's been holding up, because that makes a big difference in using these. But it says cycle projection now, R2 breakout with high target 3 approach, strong bullish continuation, a 9 out of 10, and that's totally reacting to what we see on the screen right now. But we've already also, if we come down here, we're looking at 56.96 is, let's see, we're 56.74. I don't think, I've got another, my trading screen up here. I can't get to a mouse right now for that. That's a long story. But anyway, we're at 56.75. We probably spiked up to about 80 or so. And then, so we've already satisfied everything that's being projected for a normal volatility today. And it's even calling here for an R3 reversal, 56.76, right where we are right now, the 56.34. This is probably a decent trade here, folks, is just trying to get this R3 reversal right where we're trading now. Target 56.34, 56.96, so it's using R3 as a stop here. So you can see right up here, R3, 56.76, RXT is 56.96. So it's doing R3 entry with a STX stop. That's probably pretty good. Sometimes if we get up that high, we could see that exceed a little bit. So back to the chart here. That's what intuitively, that was my feeling looking at. We're already satisfied this upward range. Is probably, if you're intraday trader, there's a trade someone here. I would use even whatever you use to trade. A lot of times I'll use a 5-minute chart looking for the initial turnover and then pairing that with an hourly chart to kind of confirm that there's a bit of a reversal. But that's probably a decent trade there. So you should be able to pause the screen on that, pull out those numbers. I had them pretty big on the screen. I won't re-release those numbers until I do the Substack later tonight. There is going to be a bit of a change. I'm not sure. I have to be out of town on Friday, so I'm trying to figure out what Thursday looks like. I'll let you know when we get close. I'll let you know tomorrow night. I'll get it all figured out. All right, so let's move on. Where we at? 30 minutes after. So let's go ahead to the NASDAQ. Same scenario. I didn't run the sheets here, but you know what? I did it last night. Let's just. So right now, all you have to do is, you see me highlighting the right column. I'm just doing Alt C, and I'm just going to have this sheet update. All right, so I'll run the NASDAQ sheet while we're talking about it. It's queuing up right now. Okay, it's running. So the what we want to look at here is the same scenario. We are right here. This is the big deal. We're at a 0.62 on the PPM1 on NASDAQ. That's a very robust uptrend. That tells us that the 10-period moving average has less than a 30% probability to be penetrated. And right now, that number is 19,783. So that's going to be your support level. If you get down there, that's probably a buy the dip moment. And that should be set up when I get the sheets. We should be able to see what type of probabilities around those numbers. These fact sheets that I show you folks every night are becoming a really big part of my analysis because the sheets are developed from my analysis. So I've got all the metrics and PPM numbers and things to look at and what's trending and a whole lot of work, multiple months of work in this thing. And the goal was to create a virtual Bob. There's a joke of app that I've been working on called Pocket Bob. So anyway, but this configuration we're probably one day off. So depending on what happens with the Fed, what type of reaction we get tomorrow, something else could happen tomorrow. And I didn't mention this earlier. It just came up as I'm talking. Is what we could get is another volatility spike tomorrow off of the Fed announcement, whatever it is. And sometimes we'll get that volatility spike. Okay, the sheet is done, so bear with me a second. I just need to bring it over. Yeah, so sorry, I shouldn't have done that right there. There was So if we get this volatility spike, this could reset. I hate to say it, this could blow things up. Let's say we get a fairly decent volatility spike. It's going to take multiple days to normalize. I've been preaching for maybe the last couple of weeks on a lot of the streams that I've been doing is that we get these volatility spikes. You get it's reflected in the market grid through the daily volatility, the range volatility, and then it has to normalize and correct down to a normal pattern. And if you have the indicators, you can actually go in and play with this. And I've set it out as far as 200 days. What will happen is it will change. Maybe that'll be one of my first lessons since I have it up here every day, is you can see where the data normalizes if you go through it. You can start to get a feel for the normalization mode and what those ranges are. So we'll talk about that. That's probably a really good meeting. I need to remember that I can get through that in 10 minutes or so. But the issue is here is that the momentum's starting to cut through. It looks like you can see my cursor here. We got a shot at breaking that first derivative, and that first derivative says we'll test the 10, which is the value I just gave you, 19,783. That number should be tested. If we get the break, that'll probably happen after tomorrow, and could happen if the market retraces just a little bit. Let's say this is the peak, just like I said a minute ago. Let me bring some values up and tie this all together. 20,116 is R3. We're 20,133, so we're just above that. 20,200 is RXT, which is the projected extreme for the day. And just for those of you who haven't been around the channel and those that have, only about 12% of the time do we ever trade outside of that range of the market grid. So it's a big deal when we get there. And a lot of times we'll see rejections off of those numbers. So from a trader viewpoint, like I said, you want to look at that number on the daily charts and then collate it down to using shorter term charts of 5, maybe an hourly, something that you can start to look at. Hey, this is an extreme, and we're going to get some kind of rejection or response from these numbers here, and that'll line up all the probabilities and help your trades get a little better. But typically those RXT numbers, they're big numbers. We're very close to that both on the S&P and the NASDAQ. So therefore, and then we've got this PPM threatening to break the first derivative, which means we could go from there. 20,200 is the extreme if we got up there. And the 10-period moving average then is 19,783. So about a 400 or 500 move off of that to get down and test those levels, okay? So I don't know if I'm having a giant rainstorm right now. It turned into winter up here in the mountains in Arizona. I'm still wearing sweaters. So anyway, but all of these numbers line up telling us that at least there's a shot that we're at an extreme right now, and we're going to come back in. And it's also suggesting that we're probably not going to challenge the 200. And definitely the equal number here, I talked about this in where this red, I left the pivots on the indicator so you can see where the marked points are, where things are being calculated from. So you've got this mark right here at 20,536. So if we traded above 20,536, that would negate the downward fibs. That would also suggest that the probabilities of going down and making a new low would not be very likely at that time. So we're just looking at that configuration from that viewpoint. I want to flash over for a second. I didn't do it on the E-minis, and I'm also going to bring up this sheet here in just a second. But this is the weekly NASDAQ. So that same price, there's that 20,276, and this is the number way over here, 20,536. So the high last week was 20,276. So we get above that. We still have a downward sloping 21-week moving average right above there, which is going to give us numbers right at 20,022 right now. So that comes right in line with all of that top number to watch. So everything's lined up perfect. We'll get through it. I think we see we potentially see a rejection. We'll see what Powell says. Like I said in my opening comments, the good news is Powell and Trump don't like each other. So we have probably the most independent Fed that we've had for years, maybe ever. Okay, but they're definitely going to be totally independent. The Fed has never been more independent, I think, at the moment, especially since Trump threatened to fire him, right? So, okay, so let's move on. We're at 38. Just coming into the Fed, we'll take a quick look at the 10-year, but let me get over to a daily chart. And what I want to see here is we're coming off a little bit of a rejection. We got up to 437. You remember my range is extreme 395, 440. We should come back into 325, 330, something back into where all of these moving averages, it's interesting, are congregated right between right now. That range is 420, upper end of the range is 432. So we're coming back into that range, and it looks fairly stable. We look at the PPMs, that's the indicators down below. Everything is stable to the point of maybe if we come down for another day or two, and then a move back up. So this is the other thing I look at, and I've talked to you folks about this, is reverse fundamental type view. And if the technicals are telling us nothing big's going to happen, I would suggest that maybe we don't get much movement. We'll get some comments that Powell will make, something will happen, that there will be an increase in volatility, but it looks like it should be somewhat subdued on the interest rates, and even on the equities and things we just went through. Everything looks pretty normalized. And not to say there can't be something happen that generates a big spike. Even if there's a big spike, then we'll probably trade right back into the ranges that we were at. So go to GC, go to gold here. And it's interesting because gold is down $60. We got basically a 2-day rally. We got a rejection out of here. We actually got, let me look at something here. We actually got a RXT, my cursor here, let me just blow this up. With this bar right here, we closed just above that number. When we do get those closes, I said there's only about 12% of the time when we do get the close above or below that market grid extreme number, so it's STX and RTX. If we get a move beyond those numbers, then what happens is we get 1 to 2 days sideways. Sometimes it can be a bottom or a low, but we got the close yesterday, and you can see the red dots are just kind of getting kind of hokey. I wouldn't be surprised if back into this curve starts to come back into these moving averages. So basically what we just saw, I'll draw it in for you. So this little moonshot that we got here, so we got this moonshot, and then you could argue that we've got a little ABC, and then we get, this could be, I'll just draw an X up here, an X wave, and then we could get another ABC, and then we get this big wedge pattern that sets up here. But if we just look at the moving averages, this bottom 40 is probably going to be the key. The 21 is still pretty solid through here. And then, so we're going to have multiple patterns that can find resistance at these different points. But I think this goes into big consolidation. The rally back that we had was way, way bigger than I thought we would get, but within the pattern. But I think what we'll see is just that unfold on gold. Let me look at the algos are confirming. Like I said, I didn't expect to see this big of a rally back, but all of these markets, gold in particular, very, very emotional, and including Bitcoin, which I'll go through next. So let's see here. Yeah, nothing earth-shaking. You can see at least out to the next maybe 5 days or so, things are being projected to be flat, stay right along this 10-period moving average. It doesn't look like anything drastic is going to happen, but we could very easily trade down into the 3220 level. That's which would be basically a retest of the lows that we did just a few days ago, 3209. So we could come back, retest that low, and if I'm right, there's a little ABC embedded in an X wave, and this would make sense that we got this much power out of this move up, and that if it fails and rejects here, we should see at least come down to the 1021 period moving average, which would be these two right here, and then ultimately we would see a rollover and go down to that next level, go down to the 40, which would put us back to retest this 3200 level, 3209 lows. But I don't think we're in a runway. We actually hit right here. The other thing that happened, I don't know how well you can see over on the right hand side, but the 3464 was, let me just see what we got to, 3444. So that fib target was 3464. So we came just short. Let's see what the value was here. 3448. So we came about $14 within that fib target, and we're seeing a bit of a rejection. What we would expect if the market closed lower, we should see the channel on the orange lines on the outside, which are the STX, RTX numbers. We'll see them turn down. We get a little downward trend maybe form, and that ultimately could lead us down toward that 32 or the retest of that low. And if it is truly an X wave, then we hold the 21 and we get another series of noise. And that would make sense after the big run up. So let me just show you this chart and then we'll move on. Yeah, so this is just the algos. There is still a fib target up here at 3654, which is live, but you can see the weekly. This is interesting. The weekly market grid has turned down. That number is 3433, and the high right here on 3448. So we exceeded it, and then we rejected out of there. And this is also, and I remember discussing this over the last several days, we've got the volatility bubble. So this outside, this is the upward side, and we're going to get that market grid to normalize. The projections, though, on this chart are just ridiculous. It's just a parabolic curve sideways maybe for 3 to 4 weeks. This is a weekly chart, and then back to it on the upside. We'll see what forms. Let me look at the algos here. Yeah, so it does look like we could see us move down into mid-June, sideways to down into mid-June. We'll see what kind of updates we get. But the pattern's pretty well pronounced, where we probably just saw the high and then 3,200, 3,209, somewhere in that level that I just discussed will be your targets. All right, let's do Bitcoin, and then we'll call it quits. I'll come up and make a couple of comments. Sure be nice if I could spell, huh? So we'll stick with the weekly for the moment. We still have these surges coming up. Looks like we're going to stay bullish Bitcoin until first 2 weeks of June and then beyond. You can see the formation of the algos that are here projecting prices higher into this pattern. So everything looks higher in general. The big question is the $100,000 gorilla in the room, which is if we close over 100,000, do we get a run up? And I talked about this last night. How we act, or if we do get a close above over there, and we challenge the 109 highs, and if we don't follow through and we reject off of those numbers, that will reflect, I think, on more of an intermediate term expectation. If we break out, I mentioned, I think the only Fibonacci targets I have right now are about 120, 122, I think is the number. So that would be the expectation. But how Bitcoin acts during this next sequence, if we can continue up this line like it's being projected, all of the algos are suggesting stability with the first ppm1, which is going to track the more stronger part of this particular sequence right now. So that will be telling us that what's likely to happen. We should write up this white line here, which is that. Let's take a quick look at the daily, just see if there's any contra trends going on here. Yeah, so the intermediate trends are looking that way. If we look at the daily trend, we still have this 10 period moving average, 10-day moving average, which will be right now at 95,600. We got a nice little move up. Did we get a break? So the close. So like I told you, this is like the markets that I cover every night. This market on this rollover happens at 10 p.m. Is it 10 p.m.? Yeah, 10 p.m. New York time, I think. It just happened here. Let me just look here. Yeah, so it happened. It happens when I start right at 8. So you get the rollover, and then what's looking though is that the PPM1, there's no big acceleration happening here, but it's maintaining a 0.24, 0.2, which is a positive upward slope. Even though the indicator looks flat, it's more about the value of that indicator than its configuration. And especially after we've already had the big surge, which was up, and this is more of the maintenance mode. I think I forgot to show you the NASDAQ fact sheet, so I'll do that before we end. It'll be kind of mixed up. I apologize for that. But this configuration here is really just a maintenance mode, meaning that the upward trend is there, it's solid. The fact that the indicator is going up and down doesn't matter. It's the value that is being maintained, and it's staying in a positive configuration, at least on projections. We'll see what kind of numbers we get here, but we're not really seeing, at least for a while, any kind of acceleration. This is going from daily. The weekly is very strong. The dailies are suggesting something different. So let me bring up this. I always lose this thing. Bear with me a second. So this is the S&P. And this is the NASDAQ. So we're looking at powerful bullish breakout, 10 of 10. I don't think I've seen a 10. So this is a 10. Massive R2 breakout approaching R3. So let's just see what kind of trade setups I suspect. Yeah, R3 reversal setup. And anybody that's been in my old live trading room, I used to do that R3. That's usually a number where you can play off against. And once again, you don't go willy-nilly and just do it because it's there. You need to validate it by looking at maybe some other charts that you use intraday. If you're an intraday trader, look for your setups on those shorter term charts around that number, because it could exceed it a little bit. And by doing a little bit of timing around using some other metrics around that number, you're going to get a better entry. If you're a trader like me, you can put in a partial position right at the R3 number and then scale it in and get confirmation, or keep the numbers tight, because sometimes it'll just keep running to RTX. So you don't want to just put it on to put it on. I think you want to see the setups. You want to see something that you're familiar with. Most of trading, especially discretionary trading, comes around those type of concepts when you've got a number. Hey, it could be, I'm not a trend line fan, but it could be a trend line. And so the age-old problem with trend lines is, will it hold or will it break? And this is why, those of you who've been around the channel a while, that's why the PPMs, that by using moving averages as trend lines and support lines, whatever you want to call them, you with the PPMs, you know what the probabilities, depending on the angle of attack and some other parts of the theory that I developed many, many years ago. And so you're really looking at, you want to make sure you're getting confirmation. So I'm just telling you, don't willy-nilly this thing. If you do and you win, thumbs up. But be careful, because when you get especially on a Fed day, there's going to be a lot of noise flowing around. But it's got the same trade setup that it had when we looked at the S&P just a minute ago. Pretty good time, about 4 minutes to go. Try to keep these streams to an hour. I know that's a long time for a lot of folks. Hopefully we'll get the chapters coming back in soon from the standpoint so you can just kind of mouse over and see what I was talking about in those sections and go to what you want to hear. So just in summary, as we come into the Fed meeting, like I said, subscribe, hit the bell. So if I do come live during market, I kind of want to trust. I have some new software I want to use for setup. I'm still having some issues, but I might just go in there and try to use it tomorrow to test it in a real environment. I've tried using it a couple of times last night, for example. That's why I was late in getting started yesterday. Anyway, but the Fed should hold. There may be some rhetoric in there that creates some volatility. There usually is at some stage. There's still a lot of emotions around the markets with the tariffs and all that. The Chinese coming to the table, that was kind of predictable, I think, from what I've been studying and reading and seeing. And, there's just a lot of rumors that there's a lot of factories being closed, and the youth in China's getting really kind of nervous and upset with the government. And like I said before, the Chinese are afraid of the population, and they should be. There's a lot of folks there. If things go sideways, it can get ugly really fast. They have a history of things kind of going off the rails. So I'm not saying that's what's going to happen. I'm just saying they need to make sure they keep things as opening up again, trying to get some things going from that standpoint. So I think that will finish what I have. I haven't looked at any comments just to see if anything's out there. Let me just see what's going on. Yeah, I'll start with Texas. Dave had a question about Apple India phone deal. Yeah, it's kind of crazy. That Pakistan situation is kind of crazy. Yeah, that's interesting that they're meeting in Switzerland. I hadn't heard. I didn't know that's where the meeting was. I haven't had been kind of distracted this afternoon. I think it says China may be bold. Good for them. Do it. Do it. We need to make our own pharmaceuticals. There's a lot of stuff that none of that gets done tomorrow, but I'm sure they'll sell us some stuff regardless of things. Yeah, I don't know. Stop talking to who you're talking to, Bo. 54. Yeah, I don't know. Yeah, I wouldn't use the dailies anyway. That's for another time. But dailies are too noisy. Yeah, looks like you should. Yeah, I that's too much there to try to tackle that. Yeah, I mean, buying that dip was good. We've now bought 12,000 symbols during that dip. So yeah, it was a good turnaround. Yeah, oh man, Tristan, I wish I'd have seen that. You said that earlier. We'd have covered the Dower. So I'm just kind of closing up here right now. Just a couple more. Let me just look at a couple more things here, and then we'll call it quits. I'm just looking at some comments. The Kendall report thinking that a boomer can save America from boomers is peak boomer. That's a good one. I like it. Yeah. Yeah. I've been saving boomers for about 40 years. We've been, we've managed a lot of money. I saved everybody from the GFC and from the pandemic, and then we made tons of money. So I've been doing this a long time, but I appreciate that. That's pretty good. I like it. Yeah, listen, I had a long conversation at breakfast this morning. We were talking about, the whole China, everything that's going on. I'll have to be careful here because this would carry too far out to go into this. But, I don't think, I think some things might be more expensive. I think there will be a move to start bringing things back here. I always remind everybody, I think Tesla built that giant auto plant in under 2 years. So you can build stuff back a lot. I still like my Gary, Indiana theory, just because it's outside of Chicago and it's got railroad tracks, ports, it's got everything you need to make a comeback at the old U.S. Steel property and probably inland steel as well. So there's some things there that I think would be there. We certainly have, I think, the workers and people that could be trained to work at those steel mills. I've said this before. I think the immigration that happened over the last 4 years, I think a lot of those people really just want the American dream. They want a job. And I think there's some opportunity for that employment for those people, I think, will ultimately be used. There's no way they're going to deport them all. Not going to happen. They're here, and hopefully there's some good people that want to participate in the economy and benefit as well, obviously. But I'm kind of interested. I need to probably do a stream just on this and just talk about it. I've had a couple interesting people contact me lately that are way more popular than I. That maybe we could do some things together. And actually two macro people. I think it would be an interesting conversation to have, podcast style. But I just think that things are, like I said, if Trump's got $8 trillion, if you were around and heard it's even the Dick or the Jack theory, which is divide by 10, divide by 2. So, even if there's $1 trillion worth of capital investments in the pocket, that's big. But if it's $3 to $4 trillion, that's big. And if it's actually 8, that's amazing. And that's going to carry the U.S. and things a long way. So I think the catastrophic view that's been played out by all the market players, as always, is the doom sells. I always tell you, if you want to know what is never going to happen, go to Zero Hedge, read every story. None of that stuff's ever going to happen. Maybe they've got 1 or 2 right, but it's like the best place to go if you want to find out the most catastrophic thing that's being predicted that's never going to happen. Anyway, with that, I'll leave that on that note. They blocked me on Twitter, by the way. So anyway, I can be a bad troll. Anyway, folks, appreciate everybody watching. Felt like a good show tonight. So check out if you, I'll put the link. I'm working on some new music, right? By the way, the music that plays on this little clip that's coming up, that is some stuff that I created. a heavy metal head, primarily German, but industrial metal. So I know I don't look like I'm that guy, but I am. Anyway, have a great evening. We will talk to you tomorrow night, same time. See you then.